All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. It's the last trading day of the week, of the month, and basically of summer. Look, in this little session, I wanted to pick up very quickly on gold and some other precious metals, just to see what's happening. Is just a quick little update, basically, and I think that it's quite interesting because gold is at an interesting spot again. Look, before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at gold. And yes, I do apologize for the amount of lines here, but basically I'll zoom in here a little bit, and I'll show you what's happening. So, look, first thing is that we have cleared, and several times I talked about this in my Markets Talk webinar, that I'm watching this little downside line because again, we were getting into a bit of a squeeze, and recently, should I say, in the beginning of this week, we managed to break this the gridlock here, the 3,375 territory, and we also managed to break the downside line. So now we're very close to basically testing the my key area of resistance, which is roughly between 3,430 and 50 levels. So this wide gray area here, and yep, it has been a good area of resistance in the past. So I'm watching this one again, and in a way, we can. Well, let's tidy up the chart a little bit. Let's get rid of from a few of the lines, and one thing that you can see here, of course, as well, is the fact that maybe, just maybe, we're forming a nice little ascending triangle pattern. Now, this is not something new that they have just noticed. No, the ascending triangle pattern, I talked already about this a lot. Just previously, I had a few of these because one was somewhere around here, but then we kind of violated it and I had to ignore it. And then the other one was, so if we could have drawn it from here as well. Again, it's also maybe not the best one to have. So I decided to stick to this one, and I think that this could be the more interesting one. Now look, for now, like I said, if we just go purely from the technical analysis rules, then yes, according to all the TA rules, yes, ascending triangles tend to break to the upside. Now, of course, we need to wait for that confirmation break first. If it happens, then yes, great. We could see some higher levels. We could aim once again for that 3,500 zone. But maybe if the buyers are still strong, then yay, we could see further declines. Now, the reason why I'm leaning towards the upside a little bit is the fact that, in a way, I'm not a very strong believer in the stronger dollar yet. Because again, I think that this is what the U.S. administration needs right now. They need a little bit of a weaker dollar in order to have their exports look more attractive on the global arena, and also to make imports more expensive. This way, trying to boost the domestic market, the production in the domestic market. Again, is this a good tactic? We can debate on that. But either way, so basically, if I am expecting the US dollar to maybe continue shifting lower, and also on the basis of that, we're expecting an interest rate cut in September, maybe actually another one later on. But if we're expecting that, then certainly that's not kind of adding positivity for the US dollar, and we could see this one kind of drifting further south, meaning that maybe precious metals and other instruments and other asset classes which are denominated in that currency could accelerate. So, and in this case, we're looking at gold. So in a way, there is a chance for gold to push further. So at the moment, we're having a nice rally here. We had the PCEs that came out just recently, so those were a little bit on the higher side. So in a way, kind of contradicting to the whole idea of going for rate cuts because inflation remains elevated. But certainly, I think that that's not going to be stopping the Fed right now, and they will continue going for that rate cut. I think this is the moment of just trying to please the White House administration. Anyway, long story short, ladies and gentlemen, like I said, I'm targeting this area right here. Again, I don't have a really specific level. I'm looking at this point. I'm looking at just like an area. First, I'm aiming for that 3,430, and then maybe the 50. Well, again, like somewhere around here. That's going to be an interesting one to watch. If we clear everything here and we see the body of the daily candle remaining above this territory, well, ladies and gentlemen, I think this is opening the door towards a possible retest of the current all-time high, maybe a creation of a new one. Let's see. A quick glance at silver. Silver is also on the right path, on the upwards path, and look, we're kind of in a rising channel right now, so there is a chance for a push further north, but certainly if you want to really get comfortable with the upside, I mean, a break of the 39.51 zone right here, which is the current highest point of this year, would be needed. And then, yeah, we could aim for that psychological 40 level. I think that the 40 level is quite doable, so just kind of be careful with that, ladies and gentlemen. Yep, at the moment we're not far from breaking that current highest point of this year, so let's see if we can do that. If we suddenly start seeing this one reversing sharply to the downside, look, in general, my preferred scenario to the downside is from a drop below the 50-day EMA, which so far has been doing a fantastic job. But if you're looking for something short term, well, maybe a drop back below the 38.26 zone here somewhere. But look, it's very tight, very close here. So, but again, if you're comfortable with that, don't get me wrong. Yeah, you can feel free to do whatever you want. But certainly, okay, we could start maybe looking at lower levels from around 38.69 here, but again, still the problem that I would have here is this maybe little upside line, which could be in place. Again, really, I need a better reversal here to the downside, and maybe even actually this one here, a drop below the 38 zone. I think just kind of stick to that one, and just from the you could give bears a little bit more confidence if we do see the price dropping below the 38 zone. But again, like I said, then we have an issue with the 50-day EMA, which would need to be overtaken. Palladium, now this one's interesting, and it is currently balancing above this 100-day EMA shown as the blue line here, and also is near this upside line, which it violated. I get it, it violated, but still, I think that the 100-day EMA is kind of helping out here, giving this upside line a helping hand. Look, long story short, if you're looking for some higher levels, I think that wait for a break of this downside line together with that 50-day EMA, just to be a little bit more on the safe side. If you're looking for some lower levels, well, I would say I'm just going to keep an eye on the 100-day EMA. If we do fall and stay below it, yep, leaning towards the downside. Platinum still looking good here. I talked about this in my Markets Talk webinar, and yep, I said that, look, we're currently in somewhat of a rising veg pattern, and even if we would just ignore the fact that the rising wedges tend to break to the downside, we look at the prevailing trend. The prevailing trend was to the downside before getting into this formation, so in a way, greater chance for this one to break out is lower. Just it happens that it's a beautiful coincidence that it's a rising wedge. So in a way, everything kind of points towards the downside on platinum. That said, I'm always approaching this with caution. Whenever everybody sees, and whenever it's kind of straightforward, I tend to be a little bit more on the careful side, because the opposite tends to happen. So that's why I have this scenario here. So while it remains inside this rising wedge, I'm not doing anything. Once it gets clearance through one of the sides here, then we'll start talking, and we'll start considering the next short-term directional move. And finally, copper. I'm loving copper, and after this crazy move that we saw, in July, this whole saga with the tariffs on copper, then came out saying, "Oh no, you know what? We're only going to do tariffs on semi finished products and copper, so the raw material is okay." So, and there we go. But anyway, it was a beautiful speculation moment, and certainly right now we're seeing a little bit of retracement here happening. I drew this Fibonacci retracement as well, just for us to understand where we could go. And 23.6, I think that's a good target to keep an eye on. So it's also coinciding with the 200-day EMA, so a good potential target. I think that the fact that we're pushing above the 4.54 territory right here, right now, this is kind of indicating that there is potential for some upside. Again, this upside for now, I'm classing that as a temporary correction for another possible leg of selling. So keep your eyes on this one. Like I said, this is the area that I'm watching here. Basically, I'm considering something like this for now, at least, and then we'll just kind of take it from there. But yeah, if it suddenly reverses sharply to the downside and breaks this upside line, I'm leaning towards the downside, and then yeah, we'll take it from there. But in general, overall, this formation looks like a bearish flag. We just need to see what kind of flag we will get. So, ladies and gentlemen, what kind of flag? Sorry, the pennant, or like a channel form, something like that. So yeah. But anyway, you got the picture. So still, the outlook remains somewhat on the bearish side, unless it starts popping somehow back above the 23.6 and these other EMAs, and then yes, we could consider a larger correction to the upside here. I do like this area just a little bit below the psychological 5 level. And now we're done. Ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. Thank you very much for your time. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you when I'll see you, ladies and gentlemen. Join my Markets Talk webinar on Monday live, the usual time, 6 o'clock GMT time. And of course, don't forget to like and subscribe in order not to miss out on these separate little pieces of information videos that I do that are coming out occasionally. So yeah, I think you can like those. I hope you can like those as well, honestly, because I'm trying to do my best. Anyway, ladies and gentlemen, enough mumbling. Thank you very much. Have a beautiful weekend, and I'll see you next week. Bye for now.